Have you ever applied for a loan, waited anxiously for days, only to be met with that dreaded message? Your application has been declined? You're not alone. In fact, millions of people across the US, Canada, and the UK face loan rejections every year, sometimes without a clear explanation. But what if I told you that the reasons behind most loan denials are surprisingly common and avoidable? In this video, we're going to break down the real reasons why your loan application might have been rejected and what you can do to turn that no into a yes. Let's start with the most obvious and most misunderstood reason: your credit score. Lenders rely heavily on credit scores to assess how risky it is to lend you money. If your score is too low, you're instantly flagged as high risk. But here's the twist. Even if you think your score is decent, a lender might not agree. That's because different lenders have different thresholds. A 650 score might be acceptable for one bank, but below average for another. And sometimes, your credit report contains errors, like a paid-off debt still marked as unpaid, that drag your score down without you even knowing. Now, credit score is just the beginning. The second big factor is your debt-to-income ratio. This is how much debt you're carrying compared to how much money you bring in each month. Even with a good income, if you're juggling credit card balances, a car loan, and student loans, lenders might worry that one more monthly payment could push you over the edge. For most lenders, a debt-to-income ratio above 40% is a red flag. So if you've been denied, it's worth calculating yours to see where you stand. Another silent deal breaker? Your employment history. Lenders want to see stability. If you've recently switched jobs, are self-employed without a consistent track record, or have large gaps in employment, they may view your income as unreliable. This is especially true in the UK and Canada, where many lenders are conservative about risk. Even in the US, where self-employment is more common, inconsistent income can hurt your chances unless you have at least 2 years of documented earnings. Next up, the type of loan you applied for. Not all loans are created equal. Some lenders specialize in auto loans, others in personal loans or mortgages. If you apply for a loan type that doesn't match your financial profile, rejection is more likely. For example, applying for a mortgage with limited savings and no history of paying rent on time? That's a tough sell. Or trying to get a personal loan with no collateral and no credit history. Another red flag. The key here is alignment. Make sure your financial situation fits the loan product you're applying for. Let's not forget documentation. You'd be surprised how often loans are rejected simply because of missing or inconsistent paperwork. Maybe your bank statements didn't match your stated income, or your ID had an old address, or you left blanks on the application form. In the UK and Canada especially, lenders are strict about document verification. Even small mistakes can lead to a flat-out rejection. So always double-check your paperwork before hitting submit. Another overlooked factor is recent hard inquiries. Every time you apply for credit, the lender checks your report. This is called a hard inquiry. Too many of these in a short period tells lenders you might be desperate for credit, which can be a warning sign. If you've applied for several credit cards, loans, or financing deals in the past few months, lenders might hit the brakes on your application, even if you've been responsible overall. Sometimes, the issue isn't you, it's the lender. Not every financial institution is a good match for every borrower. Some are more conservative, some have niche requirements, and others just aren't interested in certain types of risk. If you applied through an online lender with stricter underwriting policies, you might have better luck with a credit union or local bank. Don't be afraid to shop around. And then there's timing. Economic conditions matter. During periods of inflation, rising interest rates, or financial uncertainty, like what we've seen over the past couple of years, lenders tighten their approval standards. Even if your profile would have passed 6 months ago, the same application might get rejected today due to changing internal policies. So don't take it personally. It might just be bad timing. Let me tell you about Rachel, a graphic designer from Toronto. She applied for a $10,000 personal loan to cover moving costs. Despite a solid income and decent credit score, she was rejected. Why? Her credit report showed a late payment from 2 years ago that she'd forgotten about, and it was dragging down her score. After disputing the error and getting it corrected, she reapplied and got approved within 2 weeks. So what can you do if your loan was rejected? First, request a copy of your rejection letter. In many cases, lenders must tell you the specific reason your application was declined. Use this information to take action, whether it's fixing errors, paying down debt, or building your credit. Second, check your credit report with all major bureaus, Experian, Equifax, and TransUnion. Look for mistakes, outdated information, or accounts you don't recognize. Third, consider building credit strategically. That might mean using a secured credit card, becoming an authorized user on someone else's account, or taking out a small credit builder loan. Fourth, if your debt-to-income ratio is high, start paying off small debts first. Even reducing your monthly obligations by a couple $100s can dramatically improve your approval chances. Finally, if you're unsure why you were denied or how to move forward, talk to a loan officer. Many banks and credit unions offer free consultations. Their advice can help you tailor your application and improve your odds. Remember, a loan rejection isn't the end of the road, it's a signal. And if you listen closely, that signal can guide you toward approval the next time around. Thanks for watching. If you found this video helpful, make sure to give it a thumbs up. Drop your questions or experiences in the comments, and subscribe for more real-world finance advice. See you in the next one.